Hello guys, this is Oba FX and welcome to my YouTube channel and also welcome to our top-down analysis series. So today is Friday and the Forex market has just come to a close for the week, and as a result of that, I'm going to be doing a top-down analysis on a Deriv synthetic index, and today we're picking the volatility 50 index. And as is customary of us, we'll start analysis from the weekly time frame. Now, from the weekly time frame, what we can clearly see here is that for a very long time now, this index has been dropping. So we have a lot of red candles indicating strong bearish move for a very long time. So basically that's all we can see. We can see that the market was choppy for a while, went all the way up, and currently it has created an all-time low of about $128. So let's see if we can get more useful information aside just knowing that it has been in a downward trend for a long time from the daily time frame. Okay. Now from the daily time frame, the downtrend looks more prominent. In other words, now we can see the lower lows and the lower highs. However, I think if we look closely at what's happening most recently, let me take this out. I think if we look at what's happening most recently, there seems to be something happening around this place. So in order for us to see what's really happening there, let's zoom out a bit. Okay, good. Now, I've always told us when I come before a chart like this, after getting the general direction of the market from the very higher weekly time frame, the next thing I do is to see if I can get the rejection points. And these, like I always tell us, these rejection points could be acting as either support or resistance. And these rejection points will later end up acting as our key points of interest. In other words, if price is at those zones or those points, they give us a very high probability of taking profitable trades, whichever direction they're leading us. So from what I can see here, my first instinct would be to map out the zone. And the reason I'll be mapping out the zone is simple. Now, this is the daily time frame, which means every candlestick here represents 24 hours, which is 1 day. Now, this first zone that I've just mapped out has shown that for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, price was rejected by this zone. And I think price later broke the zone. So this zone acted as a resistance for a very long time, and then price later broke out of this zone, and the zone is currently being retested by this big red candle. Now that's my first observation. Secondly, from zooming out, I can also see that if I go to the line chart, there seems to be like a double bottom here. In other words, if I'm to analyze the movement of price for a while, price has been making lower lows and lower highs. So there's a lower low here, lower high, lower low, lower high, lower low, lower high, and then price consolidated a bit and seemed to be giving us an indication that it wants to go upwards. Now, how do I mean? If I should take this trend line from this place, we can see that the daily trend line has been broken. Now, this might not be very clear to a lot of people, but because I've trained my eyes for a while now to see some of these things, now it's a bit easier for me. So with practice, you can do this as well. And that's why I've been calling out also for those of us that would like to learn how to analyze charts like this, that we're currently having a mentorship program starting on the 3rd of July. So if you're interested, you can reach out to me via the WhatsApp contact on my bio. So to continue, you can see that this trend line made 1 touch, 2 touch, the 3rd touch. So on the 4th touch, it got broken. Now this is coinciding with what our initial strong resistance zone. Now this resistance zone now was also broken completely. Price closed above it, and it is currently being retested by this red candle. So another thing that I can impute here would be what? A trend line going in the upwards direction. So with this arrow here, I can say that price moved up, retested it, and had gone out. Now I can't say for sure that the market is now clearly in an uptrend, but what I can say is that with what the market is doing, buyers are gradually coming into the market, and we might have an opportunity to buy this market. But to further get more information, let's go to the H4 time frame. Good. Now from the H4 time frame, we can gather more information. As we can see, the trends are now clearer. So from the H4 time frame, we can see that this downward trend line has been clearly broken and retested. Now, after the retest, the interesting thing I can spot here is that there was a formation of what? A double bottom here and here on the bullish trend line. So, and we know, like I've explained before, that when we have a double bottom, that there's a rule for trading it. Now, double bottom simply means that price was rejected from a particular level, went up, and then came back to that level without being able to take it out. And we say that this is usually an indication of a reversal of price to the upside. So what we do is to allow price to go up to the neckline. This is the neckline of the double bottom, and wait for price to break this neckline. Then we'll patiently wait for price to come back to retest the neckline, and then we look for buying opportunities. Now, one thing has to be made mention of here. Now, the fact that this is a textbook explanation on how to trade double bottom doesn't mean that it always plays out like this. In some instances, price gets to come into this place, play a bit before embarking upwards. However, this remains valid. This setup remains valid until price comes down to take out this level. So I just wanted to explain that, because a lot of people only understand the textbook explanation on how to trade double bottom, whereas in reality, it doesn't play out like that on the chart. Now, taking this explanation, now let's come back to the chart. Now we have a double bottom. So it actually broke out and broke this neckline, and price went up, and we can see that price is currently back to the neckline. So that means we have price currently at our key point of interest. And like I always say, because we have a trend line underneath, price can play here a bit. And because the market makers also know that a lot of people are going to be trying to get trades in this zone, price can play here a bit, and then they make sure that price gets down to this trend line, and as a result would have taken out a lot of people who would have placed trades here or taking buy trades here, and their stop losses will be underneath the zone. So price can do a liquidity grab by taking out the stop losses of these guys, get to the trend line before moving upwards. So I also like us to be mindful of that when looking for trades in this zone. Now that we're here, now that price is already at the zone, which is a strong key point of interest, what other tool can we impute to convince ourselves that we can get valid trades from here? Now, one thing I can add would be the Fibonacci retracement tool. Like I promised in my last video on Bitcoin, I said I'll be doing another video to explain more on how to use this tool. However, one thing that I would want us to have in mind is that there is a particular zone that almost 80 or 90% of the time, when price gets to that zone, price is usually rejected. And that's the zone between the 50% and 61.8% mark. So once price gets here, there's usually a strong probability of it being rejected or reversed. So that's why it is called a retracement tool. So each time price gets into this particular zone, now there are other zones in this tool, but the most important of them is the zone between the area between the 50% and the 61.8%. And just to prove it, we can see that immediately price got into this zone, there was a big rejection. In fact, sellers pushed the market up. Now, even though buyers pushed the market up, so even though sellers are still trying to take control of the market, it is pertinent for us to pay close attention to what's happening here, because once we are able to get an opportunity to buy, then we can take our buy trades. To push this point further, what are some of the things we should look out for in this zone? Now, if first of all, once I start seeing green candles, it's a strong indication that it will be a strong indication that buyers are trying to take full control of this market. So in that case, what will I do? I'll go to the H1 time frame and then probably further to the H30, or rather, yeah, M30. So if I go to the M30 time frame, the first thing I'll do will be to impute a counter trend line. So once I impute a counter trend line, on the break of this trend line and the retest, I'll stack my buy trades, and then my stop loss would be underneath this place. But like I said, we have to be very careful. But I think this is going to buy, this trade is going to buy, and my stop loss will be underneath this place, and then my take profit will be here. So we can see that this will be a this will give us a very massive risk to reward. However, you have to monitor the trade closely and then apply proper risk management. So I'm not going to be stretching the video. This is the analysis that I'll be dropping for the weekend. So this is a very viable trading opportunity. If you come across this, watch closely on the break of the and retest of this trend line, stack your trades, and then you'll be able to testify of making profit this weekend. So like I always plead, if this analysis has been of any help to you, if you've gotten anything at all from it, please like and subscribe, share the video, and help promote my channel as I am trying to massively build it up. Thank you for your time. Cheers.